Digital currencies are very, very topical at the moment. I always think that Facebook Libra is probably the one that escalated this conversation with some of the regulators, and some of the regulators who were relatively complacent in the space, or I should say the central banks who were relatively complacent in the space, seems to be looking at the concept of digital currencies far more actively since the Facebook Libra announcement was made. So I'm very excited to welcome Carmelle to the stage, and she's going to be specifically talking about digital currencies and how we can use these as a regional payment system across Africa. So please welcome her up. Thank you.
Hi, everyone. This is a great opportunity. This is my first time at Blockchain Africa Conference, and I know a few of you are vets, so happy to join you. I am getting ready to talk about something that's very hot at the moment, but I have one rule, or maybe two. No eggs and no tomatoes thrown at the stage, please, because I know I'm at a Bitcoin conference, and I'm coming in to talk about how central bank digital currencies can also solve some big problems. So allow me to do that, because I think the conversation that we've had so far, when we think about central bank digital currencies, it's in the context of Bitcoin. It's in the context of an asset, and thinking about how can it be decentralized, distributed, and how do we move away from centralized government and monetary authority? For once, I am a big believer of cryptocurrencies. I own Bitcoin and several other coins, so my portfolio is really bad right now. But the idea of having alternative assets like Bitcoin and cryptocurrencies that are borderless by design, that don't carry biases like other form of money and other sources of means of exchange have today when it comes to the banking sector, for example, are greatly appreciated, right? But I think as players and as participants of the ecosystem, I think we have a responsibility, or at least I feel a responsibility, to be honest and thinking about what are the limitations of Bitcoin, and also highlighting the unique values of Bitcoin and cryptocurrencies. So for me, when I think about central bank digital currency, allow me to take the time to talk to you about it in a different setting, in a different context. Because yesterday and today, I think the conversations that you're hearing, especially when in the context of Africa, they are real needs, right? They are real problems and real infrastructure problems that need to be addressed. There are some things that will be done 5, 10 years from now, but there are things that need to be done now. So bypassing the current infrastructure and how it can be modernized to address some real problems, I think is probably a missed opportunity if we walk away and say central banks are central organizations and that we want to move away from the sovereign currency. I think there's another side, there's another point to be made around accessibility and adoption, quick adoption, and how do we solve real problems. So the way I'm going to talk about central bank digital currency is really in the context of how can it be a modern payment infrastructure, not just an instrument for payment, but we have an infrastructure that is called cash today. And Michelle was talking about digital economy and digital assets. How can we, in the blockchain community and the crypto asset community, move along the way of cryptocurrencies and as we're looking at African Continental Trade Agreement, as we're looking at AI, as we're looking at Internet of Things, and not think about how do we also digitize the currency system that everybody currently uses. I mean, that would be such a big lift to ask everyone to move away from the current infrastructure and ask them to go and learn something brand new. And we keep talking about education, but we would be asking everyone, regardless, especially the ones that are not thinking about how to diversify their portfolio, how do they get into advanced investing, to start learning about cryptocurrencies in order for them to get food on their table, right? So, and I know Paresh said that yesterday. The question is, what What are we solving for, right? I think we need to get really into the details. So the conversation that I usually have around this is just great, right? Now we're going to talk about central banks taking over this. So some people say, wow, that sounds very interesting. What does that mean? So my answer is usually, instead of printing cash, which is a non-digital way of getting money, how can central banks move to also digitize the way money is created, right? That's a simple transformation, major, but that is at the lowest level of the infrastructure that we can possibly get. Central banks today, hate it or love it, own the money infrastructure today, the currency infrastructure today. A start is to say, how do we digitize that? So instead of printing cash, we see blockchain as a unique technology, whether it's DLT, token-based definitely, for it to be interoperable into what we know the future is coming when it comes to the digital economy. So a token-based currency just makes sense. From an infrastructure perspective, we should look at the central bank to provide that. But then someone says, yeah, right, they're not on our side. Those guys are not going to do it. Okay. Then the next thing is, no, we want Bitcoin. We want Bitcoin, 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 Bitcoin. Yes, that should be part of the mix. And then I get flavors of, okay, fine, just don't call it crypto. It's not crypto, don't call it crypto. And then the central bank said, it's not crypto. I don't want to call it crypto. I don't want to call it crypto. You guys call it crypto. And I'm in the middle saying, okay, kind of smell and look like crypto, but whatever. Because using cryptography and using blockchain technology and using immutability as key capabilities to provide transparency in the system, to provide more trust in the system, should be also considered. So whether you guys, people want to call it crypto or not, doesn't really matter. What are we solving for? And that's the context in which I think about central bank digital currency. So a bit of background on me before I jump into this. I was born and raised in Haiti, small island in the Caribbean. Some call it the poorest country in the Western Hemisphere. It used to be the richest as the first independent black country in the world. A lot to do when it comes to getting infrastructure there. But my personal experience is understanding the basic access to finance is a gateway to how do you actually implement moving someone from poverty into a real life to have a chance. I moved to the US when I was 17. My story is the first $500 credit card that you move in the US, you get a social security card. The banks give you credit like it's nobody's business, right? You get credit cards thrown at you left and right. So $500 credit card allowed me to go to college, and that was the start of my career. So the access to finance for me is personal, right? The second thing is Haiti as a country, 50% of its GDP depends on remittances. So growing up, understanding that you're waiting for your family to send money to you so you can pay school tuition, pay for healthcare, pay for whatever little electricity that you get, is critical. So when I set up EMTECH, I wanted to find the solutions to solve those two problems. How do we get everyone access to financial services regardless of where you live? Regardless of what your potential can be, because we don't know what your potential is if you don't have access and if you don't have the infrastructure for you to make choices and get out of whatever situation you're in. So when I think about CBDC, I set up EMTECH, and from a company strategy perspective, we decided to go work with central banks and small, emerging, and developing markets. Partly because the resources were not being allocated there. Second, the modernization of the infrastructure is critical in those markets. So I want to be able to pool resources and go invest and go work with the central bankers. The central bankers that are here today are not always going to be there. We're going to have new generation of central bankers, and I think we have the responsibility, at least I feel like I do, to engage, to provide input into the future that I think I want, and I think we are in a unique time that there's a lot of transformation happening with Libra, with China, with the US, saying, look, We understand that there's a need for better infrastructure, and if we don't provide it, someone else will provide it. And do we want that alternative? Some people say yes, some people say no. So how do we move forward and say, we need to enable better infrastructure, modern infrastructure in those markets in order for us to see the digital economy and digital asset market that we actually want. So this is the context in which I look at central bank digital currency as an infrastructure. So fixing remittances, financial inclusion. So a lot of, the discussion today around CBDC can be very confusing. And I have the unique opportunity, and I don't know if my partners were able to make it, but the NZIA team, NZIA, is one of our partners working in central bank digital currencies. And the model that we have been able to define, and the world's first central bank digital currency that was released with the Central Bank of Bahamas, proved a model where you have a centralized channel, and I think there will be use cases for that. But then just because it is issued by the central bank does not mean it has to stay centralized. It's like saying cash is centralized today because it is issued by because it is printed by the central bank. It's not, right? You take cash and you go and buy Bitcoins. You take cash, you go and buy and make a deposit. You take cash and go buy stocks. We should be able to do the same with CBDCs. So when I think about CBDC, for me, I don't know if Tony is here, but I tell people, you want CBDC in order for you to get to Bitcoin, to get to the mass adoption to Bitcoin. And as we heard from the SARB today, so there's a classification, there's no banning. It's good to hear that central banks are saying, okay, fine, maybe banning is not the way to go. Glad you can realize that because it's not the way to go, right? But provide an infrastructure in which you manage the risks, the market risk, which are real. So what we're looking at the screen here is really where do you diverge to take CBDC from a centralized infrastructure, and if it stays at the infrastructure level, from there, you can have the central bank do certain things with it. I think one aspect that's interesting here when you think about identification, if you keep going straight up, think about who's going to be the central validator, that's the central bank in the first case, and the identification, whether you want people to get KYC'd and so on. But there's also a CBDC token model that you can imagine, in my mind, when I saw this, especially coming from the BIS, right? This is kind of a group of central banks. I think they cover about 60% of the central banks. Putting this out, what that tells me here, I don't know if I have a laser here, this little knowledge base model introduces an anonymous token that is also issued by the central bank. This, to me, sounds like cash. That sounds like digital cash. Anonymity, maybe now because it's digitized, you get to traceability. So I know people have a lot of concerns around anonymity and when you go into the system, whether you can stay anonymous. So this is where central bank digital currency can address multiple things. So you can keep your anonymity, you have traceability in case for bad players. There's a case there. So if you don't want to stay in the centralized, so if the central bank says, no, we don't want to play that role, again, you see the central bank say that. It's like, here's our role, everything else is a private market. Great. Let the innovators come in and provide new solutions on top of it. Let the innovators, the payment service providers, the banks, and the newcomers come and build new infrastructure and new services on a digital currency model. That's the alternative route. And the unique capability here is that even when you get to the DLT-based token, so now you start thinking about, Bitcoin networks, you start thinking about Gemini, you start thinking about Ethereum networks, you start thinking about different stable coins, interoperability, cryptocurrencies, exchanges, Binance, and so on, that can provide new services that allow you to do new things. So now you should have a wallet tomorrow where you see your Bitcoin and you see your CBDC, whether it is Coinbase that does it or somebody else, right? But add your CBDC to your portfolio, and that provides you interoperability. So a model like this tells me, if we think about CBDC from an infrastructure perspective, we should be at the table talking about and pushing our regulators, pushing the players, pushing the stakeholders with vision, with guidance, and saying, make sure you build a system that allows the ecosystem to bloom, that allows innovation. Because the sole dependency on the central bank and the monetary system, I think we all agree has its flaws. Introducing a gateway to other assets, like cryptos, is a way to manage that, right? Give people access and give people choices. So one of the things that I committed to do this year, because I've been in blockchain for a good 3.5 years now, started by buying my own cryptos. I was on maternity leave watching YouTube videos on how blockchain works. Then I came back from maternity, kind of bought my cryptos, got into the game, then spent a year thinking about how do we get stable coins started, how do we get banks to issue stable coins, and that's how we stumble upon CBDC, because it's just every time you peel the layer, you ended up at the feet of the regulator at the end of the day. And that's what Facebook did too. If you look at their paper, although they would be introducing the instrument, they parked reserve at the central bank. So, let's take that and say, how do we build on top of that? And I committed to kind of start thinking about details and how do we implement instead of just talking about things. So assume that a central bank issues a central bank digital currency, and they tell you, here's the centralized path and here's the decentralized path. Then the first thing that comes to mind is everyone is going to have a digital wallet, right? So who's going to provide a digital wallet? Then the central banks, if they continue their mandates today, probably will not want to be in the individual consumer business. So then using your CBDCs to do microloans, direct deposits, merchant services, cross-border services, foreign exchange, trading, whatever it is, those are service providers coming in and building on top of the infrastructure. I see this as a huge opportunity. Because now, when you start talking about digital cash wallets, that's going to feed into so many different things. We're talking about the African Continental Trade Agreement. If this is going to be successful, everyone has to participate. The merchant who doesn't have a bank account today should have a digital cash wallet for them to get their payments for whatever they sell through new trade routes. Because the lack of liquidity across Africa is a real problem. And it's interesting that in the trade agreement, they don't talk about payments. There's no money talk, right? There's physical infrastructure, there's change for regulation, but there's no talk about how do you get payments from one place to the other across Africa in an efficient way that is not costly and so on. So digital cash wallets can be available for everyone, for them to receive money from families. If they want to sell something, regardless of how small it is, that they have a mean to keep it in a digital way, receive it in a digital way, because they're going to use it also in a digital way. So you not only get financial inclusion, you also get digital inclusion, which is really, really important. So anyone who has cash today, so welcome to my design talk, right? This is where I say, as we move forward, how do we ask and how do we think about designing this stuff? We should have digital cash wallets that are available to anyone, no questions asked. If you have cash today, you should be able to have a digital cash wallet. And I have a couple pictures we'll kind of show you what that looks like actually in real life. Risk-based access, like I said, I think as responsible participant of the financial markets, we know that there are bad players. They make us look bad. They make all the good guys look bad. But being able to manage access based on your level of KYC, I think is somewhere we can start. No KYC for a base wallet. If you want to get loans, then you have to get KYC for credit or whatever the business model is. If you want to do cross-border payments because of anti-money laundering, because of the other jurisdiction's requirement on KYC, it's either you want to send money or you don't, right? If someone tells me that every government is going to change their laws to allow free movement of money, no questions asked, okay, great, we don't need KYC, but we need to understand that we live in a world where jurisdictional requirements is the way. How do we start there? That does not mean that we should stop just because it cannot get access to cross-border or without KYC, you stop by not providing inclusion. Digital and sovereign ID. Coupled with a digital wallet, you start talking about KYC, you start talking about establishing a profile for people who don't have IDs today, for people who don't have a credit history today. How do you start building the infrastructure stack to get to a point where everyone is included, and again, everyone has access? And the more you build that infrastructure, the more people will get access, and more people will get access over time. Allow for cultural dynamics, literacy rate. Haiti, literacy rate is at 40%, where I'm from. So you're not going to walk into a neighborhood and tell someone that they need to know how to do super complicated app phones, right? You have to take consideration cultural dynamics. Sovereign and shared. So this is a very cool concept. I think yesterday someone from Sovereign was talking. I know Flex ID is here, working on decentralized ID for individuals. Those are very important on not only providing ownership to the individual of their IDs, but also creating a mechanism where that ID can be shared based on their consent, right? We in the room know this is possible, right? I think we have to start plugging in and building the blocks to come up with a model and infrastructure that we need. Then interoperability, interoperable ecosystem. So if you have your CBDC, being able to walk to a store and make sure that the store can take it, that's a requirement that would make it widely possible to do. And the way you do that, I have a key supporting regulatory actions that you can take, making it a legal tender. That's a very, very key differentiation. And I know Archon talked about it this morning. Very key differentiation, because legal tender is something that the cryptos will never have. But what that does, it makes it the law for you to accept this type of currency. And that's what cash is today. That's what sovereign currency today. It's a unique capability that CBDCs should have as well. Digital wallet and ID frameworks, very, very important for the regulators to put that in place. Give the market clarity on what can come together, what can be built. Interoperability standards. I know we talk about ISO a lot, whether SWIFT is still the network that provides this. I think there will be new networks that come up, to be honest with you, or new players that use central bank digital currency for what they need. And then I'm going to kind of skip through this. CBDC as payment infrastructure. When I go back to this, one unique feature here is that no matter whether it's centralized or decentralized, it is a central bank liability. That makes it, not every central bank is created equal. Put that aside for a minute on which one is corrupt, which one doesn't know what they're doing, whatever. There are really good central banks out there, right? They manage difficult decisions, but they manage. How do you get that asset to be the lowest risk asset for lower counterparty risk, lower settlement risk, and liquidity risk? So this is where cryptos come in. You should have an interoperable model where you say CBDC should be able to exchange for cryptos, cryptos should be exchanged for fiat, and so on. Let people choose. Let people choose what asset they want to use for settlement and for their payment. So I'm going to skip through this, two more minutes. So here are the two goals. The two goals that I'm focusing on and the two goals that get me interested about CBDCs, because I see a way to build an infrastructure that meets this. And for me, this is a foundation to making sure that the Continental Trade Agreement is successful, making sure that we meet social development goals, right? Being able to achieve this, that's my personal goal, and I hope I get to achieve it. And not only that, I think we all in the room can agree that the future generation really demands it if we were to do this. Couple of slides. This is actually, if you go into the App Store today, you can see a $10 app. This is the Central Bank of Bahamas that issued their CBDC January 24th. And it is my $10 wallet that is supported through an app. So imagine having a central bank app where you get your cash and you have a wallet and you have a card to go with it and it's loaded. I'm balling. So you can send, receive, QR code is available, you just scan it, somebody who has the wallet just gives you their phone, money is plus and minus instant real time. this is a merchant, I bought some stuff in the Bahamas, and instant transfer, and she's very happy. No cash settlement at the end of the day. She doesn't have to take cash with her at the end of the day to home, and security reasons and so on. So that's us.
Carmelle, thank you very much. Thank you.
Sure.